Good afternoon, ladies and gentlemen. I am Manav Makija, moderator for this conference. Welcome to the conference call of Bondana Engineering Limited, arranged by Concept Investor Relations to discuss its H2 and FY'25 results ended March 31st, 2025. We have with us today Dr. Bondada Raghavendra Rao, Chairman and Managing Director, Shri Bharatam Satyanarayana, Whole-Time Director and CFO, Mr. Kondapalli Madhukumar, Deputy CFO, and Mr. Bhimanadham Ramesh, Investor Relations. At this moment, all the participant lines are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you wish to have a question, please press star and 1 on your telephone keypad. Please note, this conference is recorded. I would now like to hand over the floor to Dr. Bondada Raghavendra Rao, Chairman and Managing Director, for the opening remarks. Thank you, and over to you, sir.
Good afternoon to everyone. This is Dr. Bondada Raghavendra Rao, ladies and gentlemen. Good afternoon to all of you. First of all, salute to the Indian forces for their heroic efforts in Operation Sindoor in wee hours yesterday night. We are at the Bondada Engineering Limited. Our endeavor is to sustain the growth momentum as much as possible in high growth spaces, high growth sectors with the proper planning and execution to render maximum to the shareholder value with risk mitigation measures firmly in place. We constantly evaluate opportunities which are coming to suit our capabilities to build a base ahead to harness the future moments. I thank you all for taking time out to attend our first earnings call post listing to discuss H2 and FY'25 results. Firstly, I shall shed some light upon the financials of the company and then operational highlights fourth quarter of this last financial year. Post this, we shall move on to the question and answer session. Thank you for joining us today. I am excited to share our strong performance and growth over the past year. Since our founding in 2012, we have grown from 7 crores in revenue to a staggering of almost 1572 crore, earning a reputation for reliability and operational excellence. This year, we are pleased to report a 96% year-on-year revenue growth and almost around 150% PAT growth. Our subsidiaries, Bondada E&E, secured its first and the largest order worth almost 108 crores from Bihar Renewable Energy Development Agency, that's BREDA. We also emerged as L1 for the battery energy storage system, the first ever business segment in our total overall portfolio, best project from Telangana State, Genco, Telangana. Additionally, we expanded into the Indian Railways sector with the telecom wayside that passive infra works for their Kavach project, safety project, and successfully completed our first international order worth almost 2.7 million for Game Change Solar in the USA. $2.7 million for Game Change Solar in the USA. With a healthy order book of 5,000 crores plus 5,000 plus crores and strong financial backing from Bank of Baroda and SBI, we are well positioned for continued growth. We are grateful for the support of our clients, our partners, employees, and all stakeholders, and our investors and our bankers, and look forward to the next phase of our journey with optimism and determination. Now I would like to open the floor for the question and answer session.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. I may repeat, if you wish to ask a question, you may press star and 1. We have our first question from the line of Bijal Bakhai from Amit Jasani Financial Services. Please go ahead.
Hello. Great set of numbers, so congratulations to the whole team. Sir, we've got orders in the battery power unit, right?
Yes. Yes.
So what is the size of the order, sir?
The size of the order is 50 megawatt of power we have to store for 2 cycles. That is 100 megawatt hour. It is an 100 megawatt hour battery storage in Telangana state.
Okay. So this is an extremely large market that is opening up. How do we really expect to scale up significantly in this? What is our expectation, sir?
Yes. Actually, as you all know that actually this market is going to be expand, grow as a CAGR of almost around 27%, reaching up to the $32 billion USD. $32 billion USD by 2030. That is the market that we have. We hardly anything we deployed in the country actually. I think as of now that numbers are almost around 220 megawatt. But whereas by 27 we need almost around 35 gigawatt to be installed. That best needs to be installed. Maybe 2030 by almost around 160 gigawatt to be installed. And by 2047, we need to install 1840 because this BESS is required for grid stability, peak load management, renewable integration, backup power, and frequency regulations. So BESS is going to be a future business in renewable energy, boss.
Okay. Just one last question. So we have a very large order book. So do we need capacity expansion to fuel that, or do we have enough adequate capacity to manage to execute all these orders over the next 2 years?
Here actually 2 things. One is, in fact 3 things are required. One is that as a people management, and second one is working capital, third one is our factory. Our factory contribution to our EPC projects is almost around 78%. I don't think any problem in capacities of my factory, because actually in case of telecom we are manufacturing the towers from our factory. In case of solar EPC we are manufacturing the MMS from our factory. In case of even the railways also we are manufacturing towers and barricades from our crash barriers from our factory. That's not at all an issue. But people management, talent pooling is a continuous process that will not stop anywhere, and we are continuously recruiting people from the reputed organizations. That's not at all a constraint at this point of time for our growth. Working capital, I think for this year, last year we have well managed working capital. I think we have managed our working capital of almost 5 times last year. But this year also we have set up our working capital to manage our top line. That's not a constraint.
Okay. So no large capacity expansion investments will be required over the next 2 years.
Yeah, as far as EPC is concerned, there is no much capacity is required as EPC is concerned. But in case of BESS and in case of some IPP projects may be required, but not that much actually, not very significant at this point of time.
Okay, sir. Thank you. Thanks a lot for answering my question, sir. Thank you.
Thank you. We have our next question from the line of Ravindranath Nayak from Sunidhi Securities. Please go ahead. We have our next question from the line of Ravindranath Nayak from Sunidhi Securities. Please go ahead.
Hello. Am I audible?
Yeah, Ravindranath ji, boliye.
Okay. So the thing is that can you please give me some granularity of this RE orders around 3,589 crores you have.
what is the proportion of pure EPC order, be in the battery storage orders and other orders in the RE sector? Can you please give me some idea about this in terms of numbers?
Yeah. Out of total 5,000 crores of order book, 5044 crores order book, around around 3,589 crores is from RG side. Out of 3,589, almost around 3,300 crores is EPC and around 200 crores is from O&M side, O&M of the solar plants. All these 3,200 crores is from solar EPC only from the all PSUs and private people. We have not added this BESS order in this order book because actually we are just L1 and we are yet to get the final order actually. We are L1 and we are yet to get the order, but the order value is almost around 240 crores.
2,000?
No. As of now, it's 240 crores only. But
okay.
we are participating in best tenders almost around 1,000 crores we have participated best, like NHPC, Tamil Nadu, Genco. All these tenders are in pipeline.
Okay. And this battery storage, 240 crores you Telangana you have right now. Hello?
Yes.
Yeah, battery storage. And this out of 3,589 crores, majorly is solar EPC and O&M order will be around 400 crores or something you say, right?
No, some 200 crores. 200 crores are 250. In fact, it's 250 out of 3,589. 250 is the solar O&M, rest is the EPC.
Okay. And what is the timeline for the execution of these orders and solar EPC orders?
Solar EPC, whatever the current orders are in hand, which we have to hand over the customers in next, depends upon the order size actually, anything between another 10 months to 18 months actually. Latest by 18 months and, latest by 10 months and longest by 18 months. Next 1.5 years, we have to close all these order book of EPC. And O&M is, once it is COD is done, from there actually 3 years to 5 years duration we have to maintain the solar plants.
Okay. So that means, in 3,500 crores, you are going to execute the order in 1.5 years. So you would be in the projection of 2,600 crores, you must be getting around 1,800 crores of revenue from the RE segment, right? In this year, FY'26?
Yeah. You are correct.
Okay. And about this product business, this is very, very small, slow-growing business. So you have some, different 280. Last year it was 162 crores, and we have done around 218 crores. So whether the other products like BLDC motors, these are all in the in this order, or it is not going. It is going to be booked in the coming periods.
Yes. This year actually we have, last year we done, as you rightly said, 162 crores, and this year we have done around 218 crores. As a standalone product growth is almost around 35% from last year to this year, but EPC orders are more actually in the overall business. That growth is not much visible, but on its own it is growing good. We have good visibility on each and every product, like our EcoBuild products, our E&E, that is solar street lights and LED products, or our BLDC motors. Very good orders are in pipeline, and the good growth we will maintain even this year also.
Okay. And you mean to say in the coming period, the product business is not going to grow substantially as compared to the EPC business?
No, it is not. It is not like that. It is not like that. What I am trying to say, it will also grow. But when you compare to when you mix in overall business and see that contribution of these products, it looks less actually, maybe around 10%, 11%, 12% is the overall business.
That I understand.
Yeah.
Otherwise, in terms of
it has a growth of around 35-40% year on year.
Okay. And in the last year, you had a total RE business of around 221 crores, and this year we have almost, it has gone 4 times to 917 crores. And you are guiding around 1,800 crores in this year, in FY'26. So, how much percentage has come from the operating leverage from the RE segment? Can you quantify that, or it is very difficult to quantify?
I think my CFO Satya will answer this question. I think you are talking.
Rabindranath.
Yeah.
Yeah. So you are asking about operating margins?
No. Operating leverage.
Operating leverage.
Volume has increased on 4 times. So accordingly, the operating leverage has come. So can you quantify that? How much it has come from the operating leverage?
In terms of solar, if you see, last year we did about 220 crores, and this year we did about 920 crores. So the entire 700 crore, whatever we have added, that is actually from PSU companies. PSU companies like Singareni Collieries, Naivel Ignites, and Mahajanko.
Okay.
So these 3 companies have given contribution to the tune of about 650 crores of revenue.
Mm-hmm.
And there is because of these orders are we got it with decent margins. We have a leverage increase by about 3.5 to 4%.
Okay. So when you are guiding around doubling this revenue to 800 crores, we can expect some 0.5 to 1% increase in the margin.
In the overall company. Yeah, definitely. Yes. That is very clearly visible in the numbers also. If you see from last year to this year, that is clearly visible in the numbers also. Yeah.
Okay. And sir, how the receivables are position is right now from the PSUs particularly, because you are executing a lot of products from the project for the PSUs largely. So how is the situation right now?
Situation is very good, but actually there is no panic towards our receivables. I think we also got some comments on that our receivables. But whereas actually if you can see properly, thoroughly our numbers, balance sheets, what we have delivered in February and March month itself is a 530 crores revenue. And whereas by end of financial year, our receivables are 520 crores. With that kind of volume, doubling the volume, doubling the top line, I think we are well within the industry norms. Our receivables as a whole year, if you see that as a whole year, we are at just 33%. And whereas one more notifiable point here is actually, my revenue is a basic number. My 1572 crores is a basic number, whereas my receivables are including GST. GST is a pass-through, which is almost around 18% is a pass-through actually. But coming to my customers, all are cash-rich companies. If you take NLC or if you take Singareni or if you take BSNL, I don't say it's a cash-rich, but that's funded by ESYF. Airtel, Reliance Jio, we are not finding any problem in getting our payments actually. Only thing is, yes, end of the year, receivables are looking very high because of last 2 months of financial year, deliveries are more and sales are more, and substantial portion of that are maturing in April month, May month and June month actually. Whatever we have raised in last 2 months, those invoices are getting matured in April, May and June. In fact, April month we have collected more than 100 crores. Even May month and June month are also we are going to collect all this money. It's not at all a concern, boss.
Okay. If you see our February, March revenues, it's almost about 520 crores.
Okay.
That is actually a basic value. Whereas our receivables of 530 crores, whatever we are showing as per balance sheet, that is including GST. That means if you see on an average overall, our receivable is less than 2 months old. Overall average I am talking about. So that is well within the limits, and even if you compare with even industry standards also, we are well within the limits actually. If at all there is some comparison in the industry, we can definitely compare those numbers. We are well within the limits. We are managing.
Sir, what is the BG limit for your for RE EPC segment?
As of now, we have a bank guarantee limit of 280 crores. So we are using this 280 crores of 280 crores BG we are using for margin money tenders, which we have margin money bank guarantees, which we have to keep with along with tender participation, and what we call performance bank guarantees, which we have to do once we become L1 in the public sector undertakings.
Okay. So that means, this, with this bank guarantee limit, you can have around 400 to 450 crores of quarterly revenue from the RE business, right? EPC business?
Of course. Yeah, very much.
I think we are also given intimation to the exchange. I think already informed. Recently we got sanction of 125 crores from SBI also. That is also substantially from BG limit only. Because we are well managing our working capital, we don't finding any problem for our working capital. Only that BG limits are requirement. Those limits we are continuously enhancing with the banks based on the requirement.
For March 26 numbers, whatever we have to achieve, both fund-based and non-fund-based limits are intact.
Aligned.
Are already aligned. Yeah.
Okay. And about this battery storage business, you have which are the other states are working now on this battery storage business currently?
Like all power manufacturers, power production companies, all transmission companies, and all developers have to install this.
No. I am asking which are the DISCOMs or the utilities are working on this.
Already we began L1 in the Telangana Genco, and we have participated one tender with Tamil Nadu Genco, and one more tender, very big tender, we have participated with NHPC, National Hydropower Corporation, NHPC, and very few tenders are in line with NTPC, and as well as again in AP Genco.
Okay. And who are the leading players and competitors for you in terms of when you participate in the tender? Largely?
Here actually good number of people are coming with the listed and the unlisted segment also. But here right now competition is coming from Haryana Power is coming, Pace Power is coming, and a lot of other asset holding companies are also coming. Like when we have participated in this NHPC tender, NTPC Renewable is my competitor. NTPC Renewable is my competitor. Even NLP is my competitor. Even PSCs are also competing with other tenders. So most of the asset holding companies are also participating here, but not to worry, because a huge amount of work is there. Everybody will have their own pie to chew for this segment.
So NTPC Greenland is competing with you, whether he will develop? Okay.
Actually, they have their own projects. Even other projects also, as EPC or as a developer, they are coming for competition. They're coming for competition. If you see that recent NHPC tender of almost around 1,000 megawatt hour tender in AP, so NHPC Renewables one of the bidders.
Okay, please. All the best, sir. I will come back and with you. Thank you.
Thank you.
Thank you. We have our next question from the line of Hiren Trivedi, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. Two small questions. Between FY'24 and 25, your composition of the share from solar, telecom and products has almost, interchanged. So from 28% to 58% for solar and from 52 to 28% in telecom. So going forward, what do you expect the mix to remain the same way at the latest percentage, or will it change? And second is on your margins. So, your margins have grown from 8.9 to 11.7. So, what is the expected margin range through the next year?
Yeah. The mix of this business more or less same, boss. More or less same. Actually, I think solar will contribute to around 55 to 60% even this year also, this current financial year also, and around 30% will be from telecom. Around 12 to 15% is there from 10 to 15% is there from our products. More or less, you can say that more or less same for this even current financial year budget. Coming back to the margin, yes, we are now executing large scale projects. That too actually well within the timeline. We are delivering the projects ahead of timeline. So there is no cost overheads. And also all my prices are fixed. The prices which are coming from customer is fixed. Even my outflows are also fixed because actually we have paid very good amount of money as advance to all my suppliers, long lead items. So margins are going to be intact. In fact, actually maybe we may improve by 1 or 2 basis points.
Okay, sir. Yeah, thank you for your answer.
Yeah.
Thank you. We have our next question from the line of Rahil Mehta from Ashmaveer Financial Consultants. Please go ahead.
Hello.
Yes.
Am I audible?
Yes, boss.
You're audible.
Yes,
please continue.
Perfect. Good evening, everyone. Firstly, I would like to extend my congratulations to the management for delivering such outstanding results for FY'25. I actually got the answers to my questions, and the questions were majorly related to debtors and cash flows. So right now, I just have one question. So our cash conversion cycle is about 75 days. That means we roll our working capital 5 times a year, as you said. So can we see an increase in the churn of the working capital this year, around 5.5 to 6 times, which will decrease the cash conversion cycle? That was one of the major points I actually wanted to ask you. And the second question, can I just...
Yeah, continue. First of all, let us answer this.
Yeah, I think better we answer the question and then you repeat the second question. No?
Yes, sure.
So, Mr. Rahil, this working capital cycle of 75 days, whatever we have managed last year, as rightly said by Dr. Just now, the mix of revenue, 60% from solar and about 25% from telecom and 15% from products will remain same. And the contracts what we are having, almost those contracts only we are going to execute even in this year also. Working capital cycle, I think this year also we will be able to manage with 75 days. And improving the working capital cycle, definitely we are always 24/7, we will try for that. But as a matter of conservative thing, 75 days working capital cycle, we can manage it even this year also.
I think Rahil, Mr. Rahil. Mr. Rahil, I think as a 5 times working capital management in EPC is not a small thing here actually, not a small thing. If the 5 times we are managing, I think we are well managing. And same time, perhaps actually what we have to focus on is collection of our debtors. In fact, if you see my debtors aging is falling from almost around 80 days to now almost around 35 days, 40 days, 2 months. That we are focusing on it. In fact, we know that actually our financial year end, our operating cash flow is negative. That is because of high volumes, because of high revenue growth, and in fact, as I just now mentioned, our 120 crores of our money is as advances with all our suppliers. A-class items. Otherwise, if I am not fixing my prices, my forwarding prices with my suppliers, so our profit we cannot manage or maintain our profits. That's the reason actually most of my money is lying with my module suppliers and inverter suppliers and ITD suppliers.
To secure the price and even to secure the timelines, delivery timelines. So we have paid advances to all these suppliers, A-class item suppliers, particularly in solar.
Okay.
So that's almost close to 120 crores of advances are there with our suppliers. Otherwise, if we have not paid the advances to suppliers, we would have in positive cash flows, operating cash flows.
Positive operating cash flow. Correct. No, sir, definitely working capital, the churning of working capital 5 times a year also, it's a huge thing for an EPC company. Definitely, I wouldn't disagree on that. And sir, the last question I had that, basically our trade receivables stand at 537 crores, which is 34% of our total turnover. So, have you compared yourself with other players in the industry like Oriana, Vari? What is their turnover, receivables or turnover like?
Rahil, we don't know whether we can discuss about other companies' numbers.
I think better
those numbers are already available in the market, in the website. You can check it out. But our gut feeling is, compared to any other company, we are managing better in terms of receivables here. In terms of percentage of receivables, we are well within industry norms. And that I can assure you. But regarding the numbers of other companies, maybe you better check with their websites actually.
Correct, perfect. And so last question I had was related to H1.
As I think I also got this industry information. I think when we see in our people, one of our competitors are standing at around 32%, one of us is standing at almost around 65%.
65, okay.
So but you can compare. You can compare because you are the best guy to compare.
Because for my understanding, I think we had a very good. I think we are standing at a very good level right now. And
we have the numbers in place, Rahilji. If you can share your number with us, we will be able to share the entire information, maybe on a one-to-one basis.
Perfect, sir. Perfect. I'll do that, sir. Thank you so much for your patience and answering the questions. Thank you so much.
Thank you. Thank you so much, sir.
Thank you. We have our next question from the line of Darshit Shah from Nirvana Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity and congratulations for a good set of numbers. Sir, I just want to know, we are diversifying into fields like railways, predominantly into Kavach, and we understand the opportunity size in Kavach installations are quite big. So can you just throw more light on how big this can be for us, and are the margins relatively better than what we are doing in solar and telecom?
Yes, boss. Actually, as you know, that budget numbers are very promising by Indian Railways for the safety projects. Not only just Kavach, even that installation of crash barriers along the train routes, high-speed routes, and then especially this Kavach 2.0 installations. So, but in Kavach 2.0, we are not the core equipment supplier. We are the system integrator. Rather, actually, we are the system integrator for their private communication network. Thereby, it means we have to provide entire their telecom network along with their wayside of railway tracks. So our job is to construct a tower and connecting each tower and each railway station with fiber and create a exclusive private network for Indian Railways. That is our job. And another sector which we are looking in the railways is supply and installation of crash barriers along the side of high-speed train routes. These tenders are coming very regularly and very heavily, and we are well qualified for these tenders. We are participating. As a first order, we got from South Central Railway 228 crores on this Kavach infra project, and almost around 600 crores worth of tenders we have participated, and a lot many tenders are in pipeline. As far as the business growth is concerned, actually, every year, Indian Railway is going to spend almost around 10,000 crores on safety projects. 10,000 crores on safety projects. So even if I am able to do around 3-4% also out of that, it's a huge business for next 5 to 10 years. We have just started now, railways, and we are expecting to grow almost like we want to take this division also as our telecom and solar. Maybe down the line, maybe it may go up to 20%, 25% of our revenue contribution. Coming back to the margins, yes, is definitely better margin than solar EPC and telecom projects. Better margins than these two segments. So although competition is there also, but still right now the trend is good margins.
Got it. And sir, on the order books front, so we have around 5,000 plus crore kind of order book, and most of the order book you said probably would be executed in next 12 to 18 months. So, I mean, are we on track to kind of execute this number? So this would probably mean almost close to doubling our revenue this year.
Yeah, revenue growth is more or less same actually. Whatever we have done last year, that growth, similar growth we are trying to manage. We are trying to manage revenue growth. Not a problem, because actually even if you don't want also, we have to deliver as per the contractual terms. We have to deliver these projects. And for coming year also, huge amount of tendering and orders are in pipeline. Ordering and tenders are in pipeline. So maybe almost around 6,000 crores worth of orders we are eyeing to get that confirmed order book to add in our order book. So we may end up maybe around 8,000 crores after delivering of this year revenues, around 8,500 crores of order books by end of this financial year.
Got it. That's very great to hear, sir. And just lastly, on the receivable front, you said almost all the receivables on the March end would be collected by May by June. Is that right? Correct?
Yes, exactly. Because actually these invoices are raised in February and March only. Those are maturing in April, May, and June. Depends upon the milestones of the milestone payments.
Oh, great, sir. Thank you so much. Yeah, all the best. The way you are executing, yeah, it's quite phenomenal to see, you grow this way.
Thank you, dear.
Thank you. Thank you so much, dear.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to take questions from all participants in the conference, please restrict yourself to 2 questions per participant. Should you have a follow-up question, we request you to rejoin the queue. We have our next question from the line of Hardik Gandhi from HPG Shares and Securities. Please go ahead.
Hello, sir. Am I audible?
Yes. Mr. Gandhi, you are audible.
Yeah. Sir, congratulations on a good set of numbers, exceptional result. 2 questions from my side. Just first on the order pipeline. So right now, the last big order which we got, I think so was from Odisha government for 350 crores, correct?
From Odisha government?
For the solar EPC.
No, it's not Odisha government. It's not Odisha government. We are not working with any Odisha government. I think you must be referring to some other competitor. You just check.
No, I think so. Sorry, might have confused. But just to have an idea on the future order flow, because are you seeing any order slowdown going forward? Because as far as I can see, majority of our order on solar EPC will get completed within a year and a half time, right? So is there a slowdown which you're seeing in solar EPC contracts?
No. There is no slowdown at all actually. Even solar EPC, we are now participating as a public sector companies, NTPC, NHPC, Damodar Valley Corporation, GUVNL, all these many public sector companies we are participating in tenders. So there is no slowdown at all. Even in telecom also, even private customers, Adani is in very serious discussions with us. Adani, their RE business, renewable energy business for EPC. So even few other developers, private developers also are in discussion with us. So there is no slowdown, or there is nothing that actually it is order book or tendering process is slow down. Even in telecom also, we are working on very 2-3 large tenders. One is GFGNL, and the second one is again this extension of this 4G saturation also. That is another almost around 6,000 towers tender is already there. There is no slowdown, boss.
Understood. And the second one was on the BESS and the IPP. So just on the BESS, I wanted to know some economics about it. So if we are executing roughly 100 megawatt hour BESS, right, what is the average contract cost of that?
Yeah, that's actually, again, you have that two types. One is CapEx model, one is just EPC model. CapEx model is that actually which you have to invest and then take the rentals from the developer or the customer for next 12 years. That is the standard model which is happening. That is the Viability Gap Fund, VGF is also there for such kind of projects. And currently even standalone EPC contracts are also running, which are similar to the any other EPC contract. But this VGF Viability Gap Funding project, you have to install the BESS and then you have to maintain and you have to collect from customer per megawatt hour rental per month. Cost of this installation is anything 1.8 crores to 2 crores per megawatt. Per megawatt.
Per year.
Yeah, per year.
Per year. Okay. So just to understand, so the cost they will be providing in the cost of manufacturing, and then post manufacturing they'll provide you the rental for operation, or they will just be providing you the rental for operation and cost you have to bear as a whole by yourself.
No. As a CapEx model, we have to bear entire cost, the one-time cost. As a one-time cost, and they will pay the per month. What I told, 1.8 to 2 crores is per megawatt hour installation cost. That is supply and installation cost.
Understood. And we are under this CapEx model, or we are in the EPC model?
Both. We are there in both models. We are a mix of both models.
As of now, whatever order we have is on a CapEx.
Whatever the first order what we got is in a CapEx model, and we are also
50 megawatt hour. Is that correct?
Yeah, 50 megawatt hour, and we are also participating in a lot of EPC orders also.
And in the IPP, what are we doing in the IPP? I saw there's a target of 2 gigawatt IPP. So, approximate execution timeline for that IPP, or have we already started on that front?
Yeah. We have 2 gigawatt target by 2030. But from this year, I don't think much actually. Maybe if at all it comes, maybe around 25 to 30 megawatt, or maybe net max actually 40 megawatt will come, because most of my process is going on, that land pooling and then connectivity approvals after making that MOUs with state government. It is not that actually we are working with state government. We are just making the MOU with state government to install the plants in the territory of those states, Assam and AP. But it is a completely open access model. So in terms of solar IPP, not much in this year, but next year onwards, good numbers we are going to project.
Understood, sir. And so what is, just the last one, what is the time to construct the BESS, like 100 megawatt hour BESS contract? So what is the execution timeline from the time we get the tender?
Yeah, it is anything between 80 days to 100 days.
Is that a short, like, is that short?
Very short. It's a very short. It's a container solutions. Only thing is actually right now we don't have that complete BESS manufacturing capability in India. We have to import batteries and then containerize it here, and then we have to make that BMS and EMS solutions, and then we have to maintain. We have to supply the transformers and other auxiliary items. It is a very short duration of.
Okay, perfect. Understood. Thank you so much, sir. Thank you. All the best for the future.
Thank you. We have our next question from the line of Vinay, an individual investor. Please go ahead.
Yeah, thank you for taking my question. And I thank the management for great set of numbers. But I already got the answers that I wanted to ask, so I already had the answers. Thank you so much.
Good, thank you.
Thank you so much, sir.
I wish you all the best.
Thank you so much,
Thank you.
Thank you.
Thank you. We have our next question from the line of Nitin Gandhi from InnoQuest Advisors. Please go ahead.
Yeah, thank you for taking my question. I just used to understand this battery energy storage system. When will it start contributing to revenue, and how you propose to scale it over next 3 to 5 years?
This battery energy storage project, what we have become L1, what we became L1 is the last month only. We are yet to get the LY, and we are expecting today some board meeting is happening in the Telangana Genco. And maybe in next 2 weeks' time, we are getting the LY. Once we get the LY, we have the time of 4 months to set up this actually. Normally, people will do 3 months to 4 months to set up this. If that is if that happens in next 4 to 5 months' time, maybe next half year onwards, the revenue will be generating here. Maybe at max this year, we can. Sorry, what is it?
We can have 6 months.
6 months. 6 months of revenue, which is almost around 10 to 12 crores. But it's a lot of EPC tenders are also in progress. EPC tenders we have to claim. This is as I mentioned in previous question, answer to previous question. This is a capex model, which you have to invest your money and then take your money next 12 years time. So it is a rental only. It's a good IRR. But we are also participating in a lot of EPC tenders that will fetch you the revenues. As I mentioned, is a huge potential segment is there. This will also grow as equal as my solar EPC business, but not in numbers. In numbers, in terms of gigawatts, it can grow. But actually, if you see, if you install 1 megawatt, your project cost is almost 3.5 to 4 crores in terms of solar EPC. But in BESS, 1 megawatt hour, it is almost around 1.8 crore. So you can correlate the kind of business. But my target is to take it as fast as possible and equivalent to the solar EPC.
So by 2030 vision, which you said 1 billion company. 2030, we want to install 2 gigawatt of BESS. Okay. So that will be translating into approximately 25 crore per 100 megawatt. So whatever, correct? That's the equation.
Yeah, right. 100, right.
Yeah, okay. And the second thing
is for 1 gigawatt.
Shall I go ahead?
Yeah, please go ahead.
Okay, so now coming to the Indian Railway, where do you see that business can be scaled up? Can it be 3-4 times in 5 years time frame, or how do you think? What is the action plan to scale it to those 1,000 crore revenue?
Yeah, right now, actually, out of this 228 crores, we are going to execute almost around 120 crores in this year, in this financial year. But my target is to by 2030 is almost around. We will also take this business maybe around 600-700 crores business by 2030.
Per annum,
Oh, yeah, I understand that. So when you share that 2,600 crore revenue target, Railway 100 is yet to be added, right? Because you said 1,800 will come from solar. Telecom will give approximately 25% of 600, and products will give somewhere around 250. So railways.
Yeah, you're right. Yeah, railways needs to be added.
Yeah, okay, fine. And as far as products is concerned, what is your visibility?
Sir, please request you to rejoin the queue.
No, this is just continuation of a single question in breaks. That's all. This is the last question. This in products.
Please continue. Nitin, please continue.
Yeah. So products. Can you share similar way? What is your growth plan? How do you propose to scale it up over 3 to 5 years?
So already answered, Naya. This products, whatever is there, every year we will have a revenue growth of anything in between 35 to 40% on a conservative basis again. So all these products will grow at a 35-40% revenue growth year on year, at least till 2030.
No. I don't wish to have the numbers here. I am relating to products. What are the development plans? BLDC, what you propose to take it forward? MMS, how big it can be? LED lightings in industrial, can it be big picture? So just wanted those thoughts.
Okay. Got the point.
Yeah. I think each and every product there is a huge growth potential is there. Yeah. Whether it is an energy efficient product like our building materials or LED, and LED basically we are the suppliers of solar street lights, smart LED lights provider. So almost all the governments are coming up with the tenders like Bondada. So we are eligible and we are participating in these solar street lights. And BLDC motors also we are coming up with one good solution which is required for even weather monitoring stations and even drones also. That also has very good potential is there. As a overall, these all subsidiaries will grow at 30 to 35% year-on-year growth.
See what we can do. Yeah, we have an elaborate answer for this. In the interest of the time, what we can do, if you can call me or Ramesh on 1-to-1, we will explain you in detail once this call is
product-wise.
Product-wise, we can explain you each and everything. Yeah.
Thank you very much.
Thank you.
Thank you. We have our next question from the line of Surya Narayan from Sunidhi Securities. Please go ahead.
Yeah, thank you for giving me opportunity. And this is my questions are three. One is related to the telecom sector. Just to understand that we had actually good share of revenue in our revenue stream, but now it has come down. So just to understand whether the 4G to 5G migration has led to the tower intensity and that has led to the lower revenue. And secondly, recently the middle mile network projects has been awarded to a lot of EPC companies. So where are those projects less margin accretive for which we have not participated? And secondly, in terms of the solar power, just to understand, because the kind of order flow that was visible last year, is it that due to the election last year, the general election last year, the finalization of orders of the PSUs got delayed, and that is why the order flow is a little bit tampered?
Okay. I think you have a very long question.
से बात कर रही है उन्होंने आपके कॉल को होल्ड पर रखा है.
Hello. I think you are asking, Mr. Suri, you are asking me that actually the revenue is going down from that capex. Revenue means it is basically the capex of 4G to 5G. Capex investments are less. That's what you are asking. Yes, your point is correct, but actually, yes, there is a overall, as operators, there is a slowdown in 5G. They have covered Tier 1, Tier 2 cities, but they are not expanding into the Tier 3 cities of 5G. But it is capex deployment is less, but actually you need to deploy more number of sites, more number of towers, whether it is a tower or whether it is a pole. You have to deploy to cover that actually 5 kilometers radius. If you need 4G towers 3, but whereas in 5G you need almost around 7 towers. So more or less same, but only thing is actually deployment of 5G is slowed down in remote locations because fiber is not reached there, because 5G predominantly works on fiber. So now fiber rollouts are happening. So this 5G will come in near future also for that 3-tier towns and even remote locations. Coming back to the BharatNet Phase 3, we have not secured that order because actually almost we have participated in majority of the packages, but we're almost standing at L2, L3. But whoever is got these orders, they're also discussing with us to tie up on some portion of the work. Maybe that may mature in the next maybe 1 or 2 months. That is about the BharatNet Phase 3. But whereas in telecom itself, whatever we are executing the 4G saturation project, that extension project is coming up. That also we are going to participate. And state-led fibers, state-led fiber companies are there like Gujarat, UP, Telangana, and Mahajanko. They are also coming up with huge tenders. That also we are going to participate. And one good point that actually Microsoft is coming up with a lot of data centers. We are already empaneled with Microsoft recently, and it's a huge, big process getting the empanelment with Microsoft. We are going to manage Microsoft data centers in Hyderabad very, very soon. Actually, maybe in next 1 or 2 months, we are going to sign the agreement. Once we get into the operational maintenance of their data centers, most probably we may also get into the construction of their data centers. This is about telecom business.
So the scope of 4G in BSNL, 4G saturation project in BSNL has finished, or it is still there?
It is there. Category 4, till up to Category 4 it is finished. Category 5 and Category 6 sites, another further tender is coming.
Okay. And what about the evolving technology of 6G, what the new, Bharti and Jio, they are talking of any kind of scope for that near term, or it is not there?
Which one?
6G.
Your voice is not clear.
6G, I'm saying 6G project, any kind of scope is there?
6G will take time actually. Now only the testing is happening in 6G, in laboratories only. 6G will take time because actually even the spectrum is also not auctioned for 6G. 5G itself is not implemented properly in India. 5G will take another 1.5 years to implement 100% across the country.
Okay. And regarding the order flow delays last year, due to the election, so when are you going to see that the orders, whatever the tenders we have participated?
I don't know why we are getting that feeling. Actually, huge funding is happening, but it has its own process now. Huge funding is happening. There is no slowdown anywhere. If you see that, even if you go and see that NTPC portals or any other government agencies portals, thousands of crores of worth of tenders are there. There is no slowdown. There is no slowdown.
Okay. Okay, in terms of railways,
I don't think for our renewable energy or our telecom or even railways, if you see that actually we are all there in essential services segments. These are all essential services. Whether general elections comes or whether war comes, these services are not going to stop, or these services are not going. These projects are not going to impact.
Okay. So, in terms of the railways, out of around 67,000 lane kilometers of Indian railways, I believe that around close to 20,000 lane kilometers mandate has been given for safety installation. So, what is actually on the ground is happening? That are these railways? My understanding is that railway is giving only piecemeal basis of few 100 kilometers to different parties for the core coverage installation, and resultant work orders are flowing to people like us. So when are you expecting that railways will be giving bigger lane kilometers orders to different parties?
Yeah, railways perform a very decentralized model actually. They have their zonal concept and section concepts. Under zones also, railway zones also, each zone is acting as one company in Indian Railways. So they have section-wise also. Whatever that, whether it is a safety of crash barriers or whether it is a implementation of coverage projects, it is a section-wise only. section-wise tenders are coming. We are also participating in most of the tenders. But only thing is, yes, here actually railway tendering process is a bit slow compared to the renewable energy and telecom, because actually once we submit the tender, they will take 2 months to evaluate the tender. Thereafter, they will take another 2 months to give the LY. But that's what is happening. It is not that new that is happening, but it is their process time and history is happening. So, but otherwise, huge tenders are coming in both safety process and railways. Each and every zonal, again dividing into the sections, and each section-wise they are releasing the tenders.
Okay. Thank you, sir. Good luck for the future.
Yeah, thank you.
Thank you. We have our next question from the line of Mohit Khan from Khan & Company. Please go ahead.
Hi, sir. Good evening. I was scared I will not get a chance to ask the questions because the time was almost over. So thank you for taking the question.
No, your voice is not very clear and not audible to us.
Oh, hello. Can you hear me now, sir?
Yes. Yeah. Tell me.
Yes, sir. So this current year order book stands at 5,044 crores, sir. But our guidance was for 8,500 crores. Can you please tell me, sir, where we fell short, like was it in solar or telecom? And for this year, sir, can you share, how much is the order book we are targeting segment-wise? So how much is the order book we are targeting for telecom? How much is it for renewable energy? And how much for this railways till the September 25 and March 2026?
Yeah, March 2026 numbers already I told actually. We are going to close the order book of anything between around 8,000 to 8,500 crores by March 2026 after recognizing the revenue of this year. So again, there also I think we will be ending up with around 4,000 crores of approximately of solar EPC and maybe around 500 crores of BESS and around 1,000 to 1,200 crores of telecom, and the rest is the products and railways.
And I've seen your photo with Adani, sir. So when can we expect any orders from Adani, sir?
We are in very serious discussion with Adani, and they are evaluating our capabilities and evaluating our profile. And we will see that actually. It's all subject to the, again, commercial negotiations and commercials. So Adani works on different way. They don't give 100% full EPC because they have their own products, like they use their own panels, they use their own other equipment. So on what commercials is working out, we will be accepting the orders. But they have huge requirement, and we are also seeing that the huge potential is there with Adani customer. But we will come back to you soon. The discussions are very serious.
And sir, we also executed the game changer order, the $2.7 million last year, and you said in the interview that we are also expecting $10 million order from them. So, like, are we expecting it anytime soon?
That is temporary. That actually successfully we have completed that game change order. We have successfully completed well within the time with highest quality standards. That's what actually game change has given us the 10 out of 10 complete order closure process. But this repeat order of game changer is a little bit hard because of this Trump importing the import duties on steel structures from India. They are now evaluating and pursuing the cases. But repeat orders are not yet come, but we are waiting what action they will take. Are they going to manufacture within years? But I don't think it is possible. But how they are going to do, are they going to negotiate with their end customers or game changer? So it is, for timing it is in a halt. We have not received any repeat order from game change.
Sir, we also acquired the Spec Systems Limited recently, sir. Like, is it like plans to enter into defense sector, or what is the plan regarding that Spec Systems acquisition?
No, Spec Systems is an NCLT company. We have taken this company for the purpose of assets actually. Asset only, because actually one very big asset near to our office is there actually, which we want to expand our office. At this point of time, not getting into the defense segment, and also whatever that spec products are there are outdated actually. With that product range, actually we may not be able to do anything in defense. It is not the purpose of business, it is for to acquire the assets.
Okay. And sir, I was just going through the financial statement, segment revenue and segment results section. So in that, EPC contributed 1,016 crores of revenue and margin was 120 crores profit. So that is 11.89% margin, and our services contributed 396 crores revenue and profit was 39 crores and 21 lakhs. Margin was 9.89%. So why our services is contributing lower margin compared to EPC, sir? Because normally services contribute higher margin, right?
Yeah, I think you might be referring to our operating segments results, right?
Yes, sir. In the financial statement, yes, sir.
Understood. So basically, EPC, I think you are convinced. In terms of services, what happened is actually out of the total services, 70% of the revenue contribution is coming from Reliance Jio contract, where we have almost a kind of 7.5 to 8 crore revenue per month for managing their entire Telangana network. In Reliance Jio, we don't have much of margin share. They generally give anything in between 5 to 7% only. They don't give more than that. Because of that, actually, that services revenue and services contribution is only limited to 9% overall.
And now that is last
Sorry
year is
to
only the
interrupt,
predominant.
May we please request you to rejoin the queue?
Yeah.
Thank you. We have our next question from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, good evening, sir. Can you hear me?
Yeah, good evening.
Very good evening, sir.
Yeah, so just one question. You've given your outlook and guidance. The business model is ready for 2,600 crores or plus for this year with similar margins. But what can one expect beyond FY'26 for next 2 to 3 years? Growth rate and any margin improvements?
Yes, I think it is a repeat question. It's a repeat question.
In terms of revenue, we feel we will maintain the same CAGR for next 3 to 5 years, Rahilji, in terms of revenue. And profitability, as of now, we are pretty sure of maintaining the same profitability. And if we secure better orders or if we add IPP projects, definitely our margin portfolio will also definitely will increase.
That CAGR you mentioned is like 50-60% or the one you did this year?
56%.
56% is a compounded growth of last 13
years. That we are sure of continuing the same thing till 2030.
Yeah. If at all we want to maintain that, actually, we have to double the revenue.
Exactly.
Got it. Okay. Thank you and all the best.
Thank you. Thank you so much.
Thank you. We have a follow-up question from the line of Ravindranath from Sunidhi Securities. Please go ahead.
Yeah, Ravindraji, please continue.
Hello. So in terms of battery storage, who is the battery supplier working with?
Yeah, one G Power, which is a Chennai-based company, and we are also working with 3-4 other people. Again, in terms of all these people, again, how to bring it from China only. In China, Goshen Energy is there, and even our, what is that one more company? So right now we are tied up with G Power.
Okay. And what's the working capital need? You mentioned that 700 crores of railway business you are expiring by 2030. So what is the working capital need is similar to solar EPC or it is better than solar EPC?
Which one? Railways. Railways working capital is better than solar EPC.
Yes, better than solar EPC.
Better than solar.
You can take as a average whether telecom or solar as a railways. It's more or less same bus actually. In fact, actually, it's a standalone railways is better than solar.
Okay. And sir, any development in the Gensol orders? You are hearing anything? Can you please guide us something on that?
Yeah, I think Gensol orders are, whatever that orders Gensol got actually, government is trying to re-tender those orders actually. We are in race.
Okay. And sir, you mentioned that is a data center business of Microsoft. What is the total megawatt of the data center business in Hyderabad, and what is the revenue potential you are looking at?
Yeah, actually, they have here 2 data centers. Each one is 25 megawatt of that capacity that they're using. Right now, we are talking about only the services part, actually, maintaining of data centers, network availability, power availability is 24/7 at 99.99% level SLAs. So once we get into that contract in Microsoft, slowly we will also show our capabilities and see that actually data centers of Microsoft, how we can construct in future.
Okay, you will construct the data center. So you said that
right now it is an operational maintenance. Right now it is an operational maintenance only.
So what is the revenue? I am just asking. What is the potential revenue you are looking at from this?
70 lakhs, I think. Per month. Yeah, for a data center per month is coming around 70 lakhs. With the lump sum, actually, they are discussing. We'll come back to you very soon, actually. We will come back to you.
For the 25 megawatt data center, you mean to say?
Yeah, correct.
One data center, you say. Okay. Okay, thank you, sir. All the best. Thank you.
Yeah.
Thank you. We have a next question from the line of Mohit Khan from Khan & Company. Please go ahead.
Yes, sir. So you were explaining about why our services margins are lower, and then we were interrupted.
Yeah, that's what I told you. Out of the total services composition, 70% of the services revenue is coming from Reliance Jio. And with Reliance Jio, we have an operating margins of 7 to 8%. Yeah, that's the reason, actually, overall services, we have a 9% of...
that is the last year scenario, but this year is going to be changed because my BSNL 4G saturation project, O&M, is also getting started because project is completed recently. This O&M of 4G saturation of for this year revenue of services revenue, which is having very good margin. Maybe definitely we will maintain that services margin also from this year and all. This year onwards.
Okay, and this year, sir, we are expecting revenue of 3,000 crores, right, sir?
So you can. We are maintaining the same growth here. You can make it. Why you are asking me in open call that actually the revenue? You know that actually we are not supposed to declare the numbers openly.
But otherwise, we are confident of making similar growth of last year.
Okay, sir. Great. Thank you so much.
Yeah. Thank you so much.
Thank you. Ladies and gentlemen, that would be the last question for today, and I now hand the conference over to the management for closing comments.
Okay. So it is questions over?
Yes, sir.
Yeah. So thank you very much, Concept Review, for arranging this call. My sincere thanks to all the people who supported us in making this call. I would like to thank all the participants who have deep interest in our company and taken time out to join the call and hear us out. I would like to reassure you that you shall be kept abreast of all the latest development of the company's activities, robust financials, and management execution capabilities. If you have any further queries, we would request you to please reach out to us, and we shall ensure all your queries and points will be addressed at the earliest. Thank you once again for all the people who participated in this call.
Thank you. On behalf of Bondada Engineering Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.